Afternoon, everyone. My name is Dan Coatsworth. I'm the editor of Shares magazine. I'm here to give you a talk about the mining sector and also be the chair for the panel for this session this afternoon. Do the boring housekeeping stuff. There's a huge amount of time, amount of material to get through today. So I'm afraid there's no Q&As in this session, but if you wish to speak to any of the presenters, please wait for the coffee break, or afterwards you can go and talk to them there, or they might have a stand at the exhibition hall. We're videoing all the sessions. These will be made available on the show website, and we'll email you to let you know when they're ready. On the disclaimer, the seminar is intended for educational purposes only and is not a solicitation, endorsement, or recommendation to make an investment based on the contents of this seminar. Where investment types are mentioned, please be aware that there's other options available. Opinions expressed in this seminar are those of the presenters and not the show organisers, Shares and London Stock Exchange. The show organisers accept no liability for losses caused by use of this information. If there's any doubt over the suitability of a particular investment, you should seek independent advice. Tax treatment depends on the individual circumstances of each person and may be subject to change in the future. So, sorry about that, we have to do that. Has everyone got their mobile phones turned off? In which case, I will crack on with my presentation. So I've been at Shares for about 8 years. One of the first jobs I did when I joined the company, they said I was to cover the mining sector as a journalist. I had very limited knowledge, so within those 8 years, I went to see every single company on the stock market that is in the mining sector, talked to the analysts, talked to people who trade commodities and everyone, and I am still learning. This is a complicated area, but you can do it if you put the work in. So this is perhaps one of my favourite charts. It only runs up to 2010, but I'll explain that in a reason in a minute. So Centamin Egypt, the gold producer on the main market and London Stock Exchange. If you'd bought those shares in 2004, £1,000 worth, and held them for 6 years, they would have been worth nearly £27,000. That is a perfect example of a mining company in the boom times. It made a big discovery. It proved that the project was economic to bring into production, got the finance, got it into production, and it was helped by a rising gold price. That is why people were extremely attractive to investing in the mining sector. So on the left-hand side, you'll see the hypothetical life cycle of a miner. The graph shows is a share price trend of typically, this is pre the global financial crisis, 2007 and 8. So at the bottom it says times to buy. I took this from an article I wrote several years ago. Effectively says if the point at which they make an exploration and the really good exploration results show it's a great asset, that has proved in the past to be a great time to buy a share. The second point is when they've proved it's economic and they're bringing it into production. So this is during the latter stages of the development stage. And number 3 is once the project's in production and it's thrown off cash and they're looking to expand. So if you match that against the sentiment chart on the right-hand side, you should see a very, very similar trend. Unfortunately, this cycle has broken down. So 8 years ago, it was when would a mine be brought into production. Today, it's if the mine is going to be brought into production. So anyone's been investing in mining for a while would have seen the great excitement before the financial crisis, looking at, oh, look, great exploration results. How big can this deposit get? Is it near to someone else? That's fine. We'll borrow all their infrastructure. They've already done all the work. It's okay. A Chinese company will come in, they'll pay for it, or they'll help fund it. Now, today, it's completely different circumstances. The market is all concerned about how much cash is left in the company. Can the project make a profit at low commodity prices? And these may be even lower than the current spot prices. And can the project be financed themselves without having to rely on getting a large person to come in and do it? Because those big Chinese deals that you saw a few years ago, they're just not happening anymore. This is a great example of how the market sentiment has changed. You might not be able to see it, but on the left-hand side is Amur Minerals, a nickel project in Russia. That's the share price chart for last year. Even though the company is progressing as planned, it's showing good positive progress, the market says it just doesn't believe it's going to bring it into production, so hence why the share price is in a falling trend. On the right-hand side is Shanta Gold, a gold company in production on the AIM market in the London Stock Exchange. It's had a rough start, but brought the mine in production and solved its problems. Unfortunately, you'll see the downwards trend over the summer. And this is the market saying, we don't believe you're going to get the money to fund your expansion project. Now, both these situations are great examples of, well, the company hasn't had a chance to prove that they can get the money. And in both cases, there may still be a great story there, but it shows how the market forgets about the asset quality at the moment, is simply being so sceptical. So if we look at Centamin, now this is a share price chart that shows the bit I showed you at the start, and then more recently, you'll see it's lost all its gains. So if you're going to go invest in the mining sector, the first thing you should ever do is try to understand what the market is telling you. And here, the latter part is, one, commodity prices are falling, and two, there's a political risk here because there's a court case over where it's going to keep its license. But I'd also go back to say, has the asset quality changed? This company has an amazing gold project, but the market is not looking at that at the moment. It's overriding factors about political risk and anything else to do with not really looking at its production profile and growth outlook. The mining sector, this is the FTSE All-Share mining sector. This is probably more indicative of FTSE 100 companies. Shows it was shot up, and then in 2008-2009 had a wobble, great recovery, and now it's struggling. But what the mining companies have done, they started to strip out assets after going through a massive growth period. They're revising their mine plans to focus on projects that can be working at lower commodity prices and still make money. They're cutting back their spending. They're seeing where they can cut costs. They're delaying growth projects. And you've seen, perhaps on the smaller end of the market, lots of investment funds of having to force sellers of these stocks. So the way they're going to get the investor interest is to rack up the dividends. So you're seeing greater dividends than historically been seen in the mining sector, which is them saying, we're going to pay you to wait until the next commodity cycle upturn. Now, some would say all of these are classic signs of the market bottom. Do you pick right and just sit tight and eventually you'll be rewarded, or is it all different now than it was before? So if you're going to invest in a mining company, the first thing I should do is try and understand what events will potentially move the share price. Now, this you perhaps could argue is just a short-termist view. At the moment, commodity price gains clearly will benefit a share price. Say for if the gold price rises, the majority of gold stocks should rise, but unfortunately they'll go the other way if the gold price falls. What's the market's risk appetite? You've seen a lot of people sell out of mining stocks over the last 3 years, but you could argue that risk appetite in the market in general is improving. So does that favour the mining sector? Company news flow is a natural catalyst for a share price. And because financing is such a key issue at the moment, anyone who's proved they can either raise money at a decent price without issuing new shares at a big discount or refinancing their debt without increasing the cost of the borrowing, it tends to get a favourable reaction. And also hitting those project milestones. This is all very well, but for example, if you're an iron ore company and the iron ore prices continue to fall, hitting project milestones just won't be recognised by the market at the moment because everyone's just focused on, iron ore, is there a future for it? So unfortunately, as I said at the start, mining is a complicated area, and actually it's even more complicated at the moment because you've got so many other different factors that are basically brushing aside the actual asset quality or the quality of the management of a company. So I would say if you're brave enough and you're still interested in the sector, have a look at the miner. What's it got? Has its project got the ability to generate good economic return at the current or even lower commodity prices? Does it have a solution to energy, transport and labour? You've got all these iron ore projects in West Africa, always assuming that someone else will build a gigantic railway line and a port, but who knows they're going to get done. But if someone's got has an answer to all these already, that should be deemed favourable. Look at the commodity prices and see if the company's got a clear strategy in what it's trying to do. So on the left-hand side, these are just off the top of my head. So these are 4 mining companies, in my opinion, which have clearly have an asset that is well worth looking at. But you have to try and think, do they have any news that might be coming out soon that could potentially benefit their share price? So Gemfields has got a great ruby project. Its share price has done amazingly recently, but it's shown the market it's able to sell these rubies because this is a bit of an opaque industry. But at the next point, it has to go back and do lots of engineering studies and work out how it's going to produce a proper mine plan. So arguably, there's no near-term catalyst for that. Firestone Diamonds has managed to raise a ridiculous amount of money compared to its market cap, and it is a tremendous achievement for an AIM company, but it's going to be another 2 years before you see any production again from the company. Wolf Minerals is an extensive, very long period of building a mine. Again, there's no news coming from the company. Auris Mining is building a project, but that's going to take a while as well. So investors need to say, I can see a company might have a great asset. Do I buy now and be prepared to sit tight, or am I going to perhaps gamble and say, I think the share price is going to drift, I'll wait to buy them at a cheaper level. So I'd say, again, you need to make some really big decisions when you go and approach the sector. Now, this is North River Resources is a stock that we've been writing about in Shares Magazine quite a bit over the last year. And anyone who might read a recent copy of Shares, we did an article, Potential Turnaround Situations, because North River is one of several stocks that have fallen, I think, over 90% in the last, I think it must have been 7 years. But as you can see from the share price chart, this share price has doubled in a matter of just over the summer. Now, there's a reason for that. This project has good economics. It has the Namib project in Namibia. It's a silver, lead, zinc project. It's suddenly got great financial backers. It's managed to attract this new private equity company called Greenstone, set up by the guy who used to head up the acquisitions business development team in Xstrata, which was the FTSE 100 company bought by Glencore. Greenstone looked at 300 projects, North River tell me. North River was the only one that ticked the box and got some investment. This is a former mine. It's already got all the infrastructure there. So when I go to see mining companies that personally I find attractive, these are the sorts of things that I look for to make sure they tick the right boxes. If they've got marginal economics, they haven't got a clear infrastructure path, and you're not sure how it's going to be financed, then they're going to get crosses against them. So, I mean, this is a gloomy picture. It's probably quite representative of how the FTSE All-Share mining sector has performed in the last 3 years. It's been terrible. But anyone who says it's impossible to make money on mining shares is wrong. Petra Diamonds is a shining example of how to build a mining company. The share price is volatile. Share prices go up and down. But look at it recently. It's in the right commodity. Diamonds are a very favourable outlook. There's been no major discoveries of a diamond mine recently, yet demand is rising. So you're going to get a supply squeeze, which will push the diamond prices up. So Petra Diamonds has a great portfolio of producing mines. It's got a very conservative management company, great assets. And once it's finished expansion plans, you just look at the analyst forecast. It's going to start throwing cash off. I think it's going to start paying dividends in the next year or two. And everything seems to be ticking the right boxes. So as the share price shows, the last 3 years have been terrible for the mining sector, but that's completely gone against the trend. I ran a little filter of shares in the mining sector since the start of this year on the AIM and London main market. I don't know if you can quite see all the figures, but here's 10 or 11 there. They're all over 50%. I mean, some of them are like rare earth minerals, 150%. Kirkland Lake Gold is up 111%. Now, some of these companies were previously priced to go bust. So they've had perhaps a relief on getting some money, or the commodities come back in favour, hence they've shot back up again. Some have got great assets. Some are actually just pure hype. And I am not a fan of people that go onto bulletin boards and continuously just try and make up news, second guess what's going on when they have not a clue. So I'm not going to say which ones are on there, of my personal belief, but that's got a mixture of some hype, great assets, and some just turnaround. So it does show that if you can make money, but this is extremely high risk sector. I've never ever put any money into the sector unless you can afford to lose it. And you must do some proper work on commodity prices and what exactly the company is doing. So in conclusion, I'd just like to say, understand the catalyst. What can move a share price? Understand the asset quality. What is the company's financial situation? What is the solution to its logistics? Understand the commodity price outlook and be patient. Now, that may sound slightly gloomy, but I find this sector extremely exciting, and I'm sure in turn the commodity price cycle will go again. So keep looking at it, even though the sentiment might be poor. There are some great opportunities. So If you want to get any more information, Shares is published every week on a Thursday, and it's on the website every day. We write about the mining sector a lot because our readers love it. We write about all the sectors. So I tweet all the time about mining, Shares Magdan. There's an editorial at shares.msm.co.uk. If you want any questions or suggestions, have a look at our website. So thanks very much for listening to my presentation. And now I'd like to welcome... Thank you.